Support and resistance of a stock. While reading about technical analysis, I found out two terms: support and resistance of a stock. Can you tell me about them?
Two of the most basic yet very much effective and reliable points in a stock's chart are its support and resistance levels. Support is said to be the point from where a stock begins its upward movement. It is marked after going through the phase of correction, in case of an old support. A new support is formed at the point where the stock starts seeing good buying percentage. This being marked after going through the rough patch of correction. New supports are generally formed at right valuations. Resistance is just the opposite of support. Resistance is said to be the point which acts as a hurdle for the stock's price to be crossed. When the valuations of a stock becomes high, it notices a huge amount of selling and a certain price becomes very tough to be crossed. These points are said to be the resistance levels of stock.
How can I identify them?
There are several ways of doing so. First, change of places. Change of places is set to the condition in which a stock either breaks its support during correction. In such a case, this previous support will act as its new resistance, or breaks its resistance during an upward movement. Then this previous resistance will act as its new support. Consider an example where a stock has seen an upward movement from the price $23. But now during its correction, the stock has broken the level of $23. Now, this previous support level of stock will act as the new resistance level for this stock. Now let's consider that this stock breaks its new resistance of $23 in an upward movement. Then now this $23 will act as its new support level. Second, retesting the same level. If a stock often changes its movement after reaching a specific point, then that point becomes either its strong support or strong resistance point. If a stock during its upward movement often comes to a specific point and then retraces its path, then the investors and the traders should be very cautious about this stock at that point. More is the frequency of the retracement, more is the resistivity of that point towards the stock. This kind of movement of a stock makes it a very good choice for the traders, as it becomes range bound, but the investors should stay away from the stock. Third, age of the level. It is generally observed in this world, the newness of anything attracts people towards it. The same is valid in case of stock market. A lot depends on the time duration of a level that has been violated by the stock. It implies more recently established levels are more useful. A problem with the bear market is that quick losses forces many traders to look back for the support levels of a stock. Fourth, volume of the stock near that level. If a resistance or support level is associated with increase in volume, this increase in volume makes the trend more valid. Volume acts as a boost for the stock, either by providing extra push to cross that level or by providing extra pull to move down the level. If a stock experiences more volume at its crucial levels, then there's a higher probability that the stock will cross that level. Fifth, challenging the trend. Support and resistance often act as decisive trend changers. When there is a meeting between the current trend line and the resistance or support level of the stock, then one should be ready for dynamic shifts. Well, a dynamic shift might not be noticed in all such meetings, but the market is as you see it. So, these are 5 rules to identify the support and resistance of a stock. Support and resistance levels often play a very important role in stock's progress. Whenever one is developing trading or the investing strategies, it is very essential to consider these levels on the chart. Doing so will help set profitable targets and manage frustrations in case of trend reversals.